War is not just fought on the battlefield. It is fought in balance sheets, in currencies, and in the very foundation of economies. But have you ever wondered what it would truly cost the United States to enter a full-scale war with Iran? Today, we dive deep into the numbers, the risks, and the potential fallout that could reshape not just the U.S. economy, but the global financial system forever. History shows us that full-scale wars are staggeringly expensive. World War II cost the United States roughly $4 trillion in today's terms. The wars in Iraq and Afghanistan have already exceeded $6 trillion combined. But a future conflict with Iran, even limited analyses suggest the price tag could be enormous. One comprehensive strategic study estimated that a full-scale invasion, occupation, and disarmament of Iran could carry net global economic costs of approximately $1.7 trillion. That doesn't even include long-term veteran care or interest on war debt, costs that historically push total figures even higher. Let's break down the potential U.S. military spending. Deploying 1.5 million active soldiers plus reserves could cost around $300 billion per year. Advanced military operations across air, sea, cyber, and space might add $500 billion annually. Weapons, ammunition, and logistics could cost another $400 billion per year, while domestic support, veteran care, and reconstruction could add $200 billion. Altogether, a full-scale, multi-theater conflict with Iran could cost the United States between $1.5 and $2 trillion per year, and that, as a conservative estimate, the United States is already carrying over $35 trillion in national debt, with annual deficits exceeding $1.5 trillion. Adding a multi-trillion-dollar war with Iran would push debt levels into uncharted territory. Projected debt increases could look like this. Year one of war adds $2 trillion, bringing total debt to $37 trillion. Year two adds $2.2 trillion, reaching $39.2 trillion. Year three adds $2.5 trillion, pushing federal debt beyond $41.7 trillion. This elevated debt load could push the debt-to-GDP ratio above 130%, a level historically associated with sovereign debt stress. To finance these commitments, the Federal Reserve might be forced to monetize debt on a massive scale, printing trillions in liquidity just to sustain the war effort and service the rising interest burden. Historically, such measures create a dangerous cycle of inflation and declining confidence in the U.S. dollar. But the costs go beyond numbers. What happens if this debt spiral triggers a collapse of confidence in the financial system? Interest rates could skyrocket. Inflation could accelerate. The U.S. dollar could weaken dramatically. In the worst-case scenario, we could see a reset of the global financial system. Under such a scenario, the U.S. dollar could lose or significantly weaken its position as the world's reserve currency. Hyperinflation could strike domestic markets. Stock and bond markets might collapse. And alternative assets like gold, silver, and digital currencies could rise sharply in value as investors seek safe havens. Gold and silver could reclaim their historical roles as stores of value, while digital assets, including Bitcoin, Ethereum, and central bank digital currencies, could emerge as foundational components of a new, decentralized financial system. A financial reset would accelerate the adoption of digital currencies. Cryptocurrencies, stablecoins, and national digital currencies could become central to international trade, bypassing traditional banking systems. Governments and central banks might adopt a hybrid monetary framework based on digital assets, precious metals, and limited fiat currency, a radical departure from the debt-fueled framework the world has relied on for decades. The financial shock of a full-scale war with Iran would ripple across the globe. Allies and adversaries alike would feel the effects. Supply chains could collapse. Energy prices could soar because roughly 20% of the world's oil supply moves through the Strait of Hormuz, a choke point Iran could target if conflict escalates. Even modest disruptions could send oil prices soaring, feeding inflation across global markets. Countries might begin to dollarize their reserves. Commodity prices could spike. Currency volatility could ignite financial uncertainty. And the adoption of digital and commodity-backed currencies could accelerate worldwide. But the consequences go even further. Beyond the economy, a prolonged conflict could destabilize the region, forcing the United States to maintain a military presence for years, if not decades. Veteran care, rebuilding infrastructure, and ongoing strategic operations could continue to add hundreds of billions to the national debt long after active combat ends. Historically, wars have also altered domestic policy and social priorities. Massive debt, rising inflation, and potential financial crisis could force the government to cut social programs, raise taxes, and implement strict financial regulations, fundamentally altering the economic landscape for decades. All of this points to a sobering reality. A full-scale war with Iran is not just measured in lives lost or cities destroyed. It is measured in trillions of dollars, exponential increases in national debt, and destabilization of the financial system. If history and economic logic are our guide, the aftermath could reshape the world's economic order, ushering in an era where digital assets, gold and silver, define value once again. War is the ultimate economic disruptor, and in the 21st century, its cost, both financial and structural, could redefine everything we know about money, security, and global power.